Hello and welcome to Trading with Technical Indicators. My name is James Boyd and welcome all of you here today on this June 15th. Now, a question I asked in the chat was, what color shirt did I wear last week? Well, let's take a quick look. So this session is going live. Let me bring something up just real quick and I'll pull. Let's go like that. Now, there it is. All right. So just real quick, as you're joining us, this is live, but it's also recorded. We stream our channel on YouTube. Our channel is called Trader Talk Schwab Coaching Webcast. Go to YouTube, just type in Trader Talks Schwab Coaching Webcast. You'll see this being played on YouTube. You could also actually subscribe for free. That way you can see all of our content. Speaking of that, last week, if you missed us, we had a session last week. Let me pull this up. And so last week was gone the previous week, and we wore Green Shirt Monday. Now, this green shirt almost has been unbeatable when the market has pulled back wearing that green shirt, having a little fun with you, of course. And today I said, hey, let's just go with it again. Okay. Now, just real quick, little fun with you. If you said, I don't have that playlist, where can I get that? Let me give that to you right in the chat. Bookmark that. That way you can see all of our content as well. Okay. Now, just real quick as we're getting started, we want to talk about some of these technical indicators. We'll talk about just different types of indicators. Price is an indicator, oscillators, okay? We'll talk about some charts and why we use different charts and what they're used for. Now, when we do this here, remember that our examples, well, I'll talk about some of the information here for general informational purposes only. Also, if we bring up, let's say, options, remember, options carry a high level of risk and are not suitable for all investors. When we talk about examples, we will do those on the Paper Money software application. Even if you're trading real, still trading paper allows you to practice, okay? And you might kind of be practicing an indicator, practicing a strategy, and so on. Don't forget about Paper Money. Great way to actually learn and test forward kind of some of the things you're working on. Now, also remember that investing involves risk. Without risk, there's no reward, okay? And we'll talk about the markets to begin with, and then we're going to go into some examples of using indicators, price, oscillators, and different charts. Now, also just real quick, now Lisa says, yeah, I said one of the worst feelings is when you're fully invested and you don't have any more money. It's one of the worst feelings ever. It's like being, cut by 1,000 paper cuts. Just the worst feeling ever. Okay, in paper money. Okay, that's what it feels like. You just run out of paper money. Now, let's pull up these charts for just a moment, okay? And let's start with the SPX, okay? Now, the SPX, if we take a look at this, you're going to see that last week, okay, let's say, now let's go back to here, okay, 6-4. So 11 calendar days ago, we saw the market drop, right? 6-4. I think that was Thursday, and that was Friday, okay? This was Monday, Tuesday, Wednesday, Thursday. So really, it was really Thursday afternoon where we started to see the prices maybe getting a little bend back up. That was maybe at the close of the day. By the end of the day, on 6/11, you saw the shorter term moving average go green. Now, again, some people like that. Some people are going to take that signal. That doesn't mean they get all at once. They probably dollar cost average. Friday, we actually closed above the 20 period moving average. That is a 20. And what you're going to see is today with the gap, beautiful gap, by the way, and not a bad thing to wake up in the morning. You haven't done anything and it's just up. Okay. Now it could be the reverse, right? But the big actually thing is here, those moving averages trying to pinch. So you know that step 2 is probably potentially near. Now, what you're now going to notice on the SPX, 7,600 was really the old high, not a brand new high on the SPX. Now, remember, the SPX is unequally weighted, heavy technology. The SPX EW, and I want to show you this because we talked about this last week. We kind of saw some unusual behavior we don't normally see. If you equal weight the S&P 500, we're all set. Let's say you got 10 sectors, each one being 10%. Well, equal weight went to a brand new high here today. The SPX, okay, A50R. What we saw was interesting last week on this is when the market went down and we flagged that it was more led by and isolated to mostly technology and semis, you didn't even really go down on the percentage of the stocks of the S&P 500 that were above the 50-period moving average. Didn't even go down, okay? Which kind of led us to believe that it was more isolation. The percentage of stocks that are above the 200-period moving average, okay? Now, by the way, that's a brand new short-term high on the percentage of stocks above the 50-period moving average. Not a bad thing. When you look at, let's say, the SPX, okay, SPX A, there it is. By the way, if you just type in $ SPX, you'll see it goes to the drop down. You can see the 100, the 200. I'll use 200, and the same thing there. Okay, not a bad thing. It's not a bearish signal. Okay, so overall, when you really take a look at kind of what we're seeing is whether we look at equal weight, we look at the percentage of stocks above the 50 or the 200, higher, and we want to kind of now see are we starting to see some more risk-taking behavior? The two indexes that we kind of look for risk-taking behavior is the small caps, okay, doink, brand new high, okay, and you're going to see that the NASDAQ, which would be the second, it's up, and it's a big up here today, big one, okay, and that is almost at a brand new high. Now, not quite. Now, you could flag the semiconductors, SOX, and if you look at the SOX, well, you make the sound effect that you want, okay? Go ahead, put the sound effect for you. But that was a brand new high. So we look at the Russell and the NASDAQ for risk-taking behavior. If people are actually thinking there's growth, they're probably going to plow into those areas. If we're talking about an industry group, probably going to be the semiconductors that are leading the bullish charge. Now, if we look at now, do not forget about mid caps. Mid caps also from Friday did make another brand new high. What about the Dow Jones? Kind of, we're saying last week, could the Dow Jones lead the way to the upside? It kind of did. Today was better, though. Brand new high on the Dow Jones. Large caps, okay, smashing higher. And so really right now, we have mid caps at a high, small caps at a high, large caps at a high, S&P 500 unequally weighted, heavy tech, not at a high, NASDAQ not that far off the high, with the big move in semiconductors. Boy, what a big one it's been. Speaking of big one, you're going to see if we go to the visualize, we'll pull up, oh, golly, that's a lot of green. Now, what you're now going to notice is in that information tech, if we went into there, we know this section right here, NVIDIA, ADGO, MU, AMD, semi. But I want you to also kind of pay attention to some of these other ones right here. Google, which we want to talk about here today. And you're going to see Amazon getting a little push. Now, is there anything that you're watching here today that you just want to speak now, forever hold your peace? Well, as I'm getting some answers back, do not forget about Corning. Do not forget about that WDC, Seabiscuit or Seagate Technology, Dell, SanDisk. Those are also at the bottom. We don't have to run a search. We can just look at those right there and kind of see what's getting a little bit of move. Okay. Yeah, there's one of you that don't like the sound effects. But maybe I just work on that one person. Okay. Maybe that one person just needs to chill out a little bit and just have a good time. Okay. And I that's okay. I was there once too. Okay. Now, yeah. Now, Dean actually mentions the AXP. I'm so glad you mentioned that. Let's kind of start with a couple names just real quick. Okay. So if I went to, now, by the way, financials, where do you see AXP? So there's the financials, and there she is right there. Okay. AXP. Now, if we go to just real quick, let's start here. Remember, when we say, let's say XP, we're talking about Dow stocks. Okay. Now, what we did so far is we kind of worked top down. It's important to top down because we want to know what are we likely going to find, bullish or bearish. Second, we want to know where are we going to look. Okay. Now, the one thing I will say just real quick before we talk about AXP is obviously, I'm just going to make mention of the sectors. Okay. Technology obviously got a push. No surprise there. Discretionaries bounced back pretty hard. Let me actually show what these look like. Okay. I changed my mind. Technology sector, there she is. Notice that that's kind of like your tilted down W pattern. and we got above the middle of the W. If you cannot see the middle of the W, let me help you. So the middle of the W is right there. And you're going to see that we kind of dropped down again and went right there. If we can stay above that 37.11, we're getting that rotation on the MACD and so on. You could try to hook back up to the prior high. Wouldn't be shocking if it did. Now, the big thing is when we take a look at also the second one, discretionaries, think Amazon, okay, Apple among others, think Wally World, Walmart. And if you take a look at this, pretty good pushback to the upside, okay? Why this one? Why this sector? By the way, someone doesn't have to buy an individual stock. They just might buy the group. This is kind of your breakup seaport of right around 2350, snapping back to the upside. Now, stocks that are similar in this area, the charts look very similar. If we said discretionaries, it's not all discretionaries. Walmart is kind of right at this area, right at the area of resistance, knocking on the door. Now, guys and gals, we've gone through this at least 10 times, okay? We've kind of talked about it. The last one we did on this was the UAL. There when UAL was below the support level and it shot to the upside, broke resistance, smashed its way to the next level of resistance. Well, we're not saying it's going to do that, but sometimes it might try to. And so this is going to be one I'm going to come back around in just a sec, but let me show you what that looked like. The UAL was right there and it smashed. Actually gave you a nice little run in that first push, then fell all the way back down to support. I think it was Scott that actually mentioned that last week on that monster handle last week, middle of the webcast. And what a beautiful push, okay, to the upside. So discretionaries, now remember discretionaries, you could say retail, okay? You could say, think of clothing stores, think of also restaurants, think of home building or home building supply stuff like Home Depot, etc. Think of also maybe like when we say retail, I'm going to also include some airlines, okay? It's a part of you buying something, but you're just buying an experience. Think of also hotels as well. I know that kind of legs into the transports, but speaking of transports, we did see the industrials. I need your help here. Industrials smash its way to the upside. Are there any industrial names that you're watching besides Kitty Cat? We'll come back to that in just a second. Okay. Any others besides Kitty Cat? And the last one I want to kind of make mention of just real quick is base materials. Basic materials, we flagged copper really on Friday. Gold and silver also got a snap back, but copper kind of was the leader there. Pretty good push. So, all right, we got some work to do here today. Can't play around here today. All right, now let's go back to Dean's. Dean's thinking he forgot that I forgot. No, Dean, I didn't forget. Now, let's go to AXP for just a moment, okay? Now, when you look at AXP, this is what the trend has been. Now, let's kind of talk about the chart for just a second, okay? When we look at this chart, okay, we're kind of looking to see, start with that 1 year daily, okay? And it's just kind of been more, you could say, to some degree, sideways. That doesn't mean there's not swings in there, okay? Now, when we draw like support or resistance, we can go from current, maybe over the last 1, 2, 3 months, and try to draw some lines that are more recent. Well, if we were to do this, and I'm going to try to touch some of these recent highs, there's been kind of some areas. Now, why did Dean bring this up? Let's ask Dean. Dean, by the way, that's my father's name, middle name. But the big actually thing is when you take a look at this, we kind of see that maybe there's been some higher lows and lower highs. And then today, American Express pokes out. Okay, now on this, so we could look at this and kind of say maybe the reason why Dean brought this up is maybe diagonal resistance break. And remember, this goes back to discretionaries, right? If people feel more confident that they could spend, they use that debit card, credit card, whatever, right? Now, American Express, Visa, MasterCard make a little fee off that transaction and maybe interest if they don't pay it back, okay? Now, if we take a look at this, when are the earnings coming up? The 24th of July. Now, guys and gals, you got to remember, sometimes the run up to the earnings, the speculation is sometimes, not all, greater than what actually happens on the earnings day itself. People speculate. That's why it's called investing. They're investing for what they think is going to happen. They don't know. Speculating. Okay. Now, if we look at this, and let's go to this next, about the fourth or fifth chart in, we want to double check, is this maybe a little too high? Well, if we go back to this chart for just a second, look at AXP. The yellow line again is 3% above the 10-day moving average. Red 5, white 7, blue 10%. Now, how many of you notice here today in the airline space, how many of those stocks punched that 10% envelope? Did you see any here today? You should have, okay? Because a lot of people were profit taking. I wondered who it was, okay? Now, if you take a look at this, again, the goal, we always kind of categorically talk about this. If someone has a setup and they're buying above the 10, but not above that yellow line, 3% above, for some people, they might say, look, that's an A setup, meaning that's as close as you can get to support with a bounce, okay? Now, to get a bounce, you got to get the stock to go up, which means it's getting elevated off that 10-period moving average. Think of the yellow to the red to B, okay? Maybe that bounce was quite strong over the last day or two or three. C would be between red and white. D would actually really be between white and blue. And if you're buying a stock that is above the blue, it's not saying it can't go up, but you might be running on fumes. Rarefied air. Statistical probability that you probably get a pullback, okay? So if we looked at this and kind of said, where are we here on the grading scale? We're kind of right here like a B minus, which is what I had in college, okay? Now, if we take a look at this, we might ask ourselves, well, what might the strategy be? Well, if we're talking about a $337 stock, we can buy shares, we could, but the biggest thing is going to chew through a lot of capital. We talked about if this is going to be something, example, given a couple $100 stock, they might be doing verticals, okay? The advantage of the verticals is defined gain and loss. Second, you could take some more fluctuation and it's not dollar for dollar losses like stocks, okay? Now, what I'm going to do on this is I'm going to go back to just kind of clear that, okay? And what I'm now going to do is let's bring up paper money. Now, there's some capital to work with here. So in the margin account at 51,000, 38,000 of the 51 is sitting on a big, fat, puffy pillow. Could work some of that cash off. Try to do that here today. Same thing with the IRA. 164 and change, 155 sitting in cash. Now, what's the return on cash? Okay, if you are. Well, so we want to see if we can't kind of work through some of that. Now, what I'm going to do, trade number one, we're going to bring up AXP. Now, on AXP itself, you're now going to notice I'm going to go to the trade. Now, we could speculate a certain strategy. We need to double check. Volume on the stock so far here today, 1.48 million. When we actually pulled the implied volatility, it's going to be about 28% if we go the monthly options, okay? And so that's kind of mid-range. When we double check the open interest, couple hundred, thousand. Now, if we have that, the stock volume is greater than 1 million, a couple hundred, 1,000 on the open interest, leads us to a better idea that the spreads might be a little tighter. Tighter spreads, not a bad thing, okay? Now, what I'm going to do in this case, let's say the investor says, look, could I choose between a short put vertical or a long call vertical? Now, can anyone actually tell me why might the investor choose a long call vertical? Why over a short put vertical? What's the difference? Yeah, well, if someone chooses that long call vertical, you're really saying I want a higher potential gain, okay, relative to the short put vertical. Short put vertical is really, for the most part, about probability, not as much profitability, typically, if you go out of the money. If you went, let's say, at the money on the long call vertical, you're trying to get a higher potential upside. Now, we're going to choose example given the 330. We're going to buy the 330, and then what we're going to do is sell the 340. Now, we talked about this when we talk about indicators, we talk about the price, right? Kind of doing a little diagonal breakout. We talked about the timing of it, okay? And then now we're talking about the strategy. Look, you can know all you want about indicators, but at the end of the day, the sharp end of the pencil, if you will, is what's the strategy? You buying stock, you do an option, what is it? Okay. Now we're going to look at this 330, 340, $10 wide. What's the debit? The debit is what the investor's paying. Now we actually see in this case, it's $533, $553 for what the investor could lose. That does not include the $1.30 commission. Grand total survey says $554. Max profit is the spread minus that max loss. And there we actually see 447. So if someone chooses a long call vertical, they're saying, I want a higher potential profit. They're also saying, look, I want to also get something where I can have an offset to help lower the debit and lower the break even. The break even expiration, we need to be at 335.53 at expiration. Where are we now? 337. So we just needed to stay here. But really the way the investor makes the most money is it closes above both strikes. Going to go ahead and send the order. And there it is. Okay. Now, what I want to do is I want to just talk about one of the discretionary names. And what I'm going to do is I'm going to type in Apple. Okay. Now, there's two areas if we take a look at this. Apple, if we said, well, what about the timing? If we looked at Apple, we cannot say, like if we're talking about indicators, price, have we had any good signs of reversal on the price? If we said, what is resistance? Well, when we look at these big red candles, sometimes the middle of that red candle can act like resistance. That's resistance 1. Resistance 2 is the opening price of that. Now, why are we bringing this up? Easy answer. Because we're trying right now, if we close here, this would be the first break or close above the resistance. If we can get above 295 and stay there, path of least resistance 300. Now wait, if you get to 295, what's the likelihood of that short-term moving average going from red to green? The answer is high. If we go to 300, then what's the chances of the 20-period moving average going from red to green? The answer is high. Okay, not absolute, but high. Now, the higher up you go, obviously the moving averages go back to green, and you might even get a crossover. So noted, it's early. Okay. Now let me kind of show you, this is another stock, it's twin cousin, if you will, Amazon, where it might be, I'll just kind of talk about the timing difference, right? Well, notice on Amazon, which we'll come to next, we have the green moving average on the 10. We've had the cross here today. We did. We had the green dot, or having currently. So what you're now going to notice is, when you get at this turn, the biggest thing that causes the turn is price. Okay. Does the price start to go up? Now, if someone said, now let's talk about strategy. Okay. We talked about the trend. We talked about the timing. Let's talk about strategy. Well, if you're saying it's early, might the investors say, look, I'm going to go in stock? Now they could. Okay. You go in stock, it's dollar for dollar, capital intensive. You think your timing is it's spot on. Problem is you don't have a lot of confirmation yet. And if you don't have a lot of confirmation yet, the investor might say, I'm not going to do a position that takes a lot of capital and it's more sensitive to price movement. Now, in this example, what I want to do is I want to go to the trade tab for just a second. And what I'm going to do is I'm going to go down to the 17 July expiration. And what I'm going to do here is I'm going to sell, and I'm going to go lower delta on purpose. Why lower delta? Well, because we don't have a signal yet on the moving average. We see price, but if we're wrong, we want it to be a little bit more forgiving. How is that more forgiving? Well, we're selling a lower delta. lower strike. Lesser chance of the stock to be below that strike at expiration. Could be, though. Now, what I'm going to do is I'm going to right-click on that 285, sell, and I'm going to widen this out. Now, whenever you sell the put, the investor is obligated to buy the shares at the strike price. Okay. Now, if we did the 280, that's your classic short put vertical. Short put vertical, you're trying to have a higher probability of being right. Now, if you take a look at this, we're going to widen this out for just a second and say, where do we actually get about a 10 delta on that put side? The 10 delta, you really got about 270, 265. I'm going to widen that out to about 265. Now, wait, if you widen that out, what strategy is this really? If you think about it, right? You sell the 285 and you buy the 285 like lower down than you would see in a put spread. Well, this is your cash secured put with downside protection. You're going to a delta of 10 or less to try to pay less for it, still defining the risk. By paying less for it, your credit's higher, okay? And since if your credit's actually higher, what you're now going to notice is the break even would be lower, okay? Now, the profit there, max loss there. It's just taking the $20 spread width, mining the max profit. Again, are we thinking that 265 is going to be worth something? Probably not. It could. But since we're buying that, it does define the risk. And it also, for example, does add 65 more cents of commission. Some people, they like that. Now, just a quick question. How many of you like doing that where there is downside protection? Okay. Now, for Go Set Quad 7, you said what delta was the 285? The delta for the 285 was 25. Now, PS says, are we entering Apple or Amazon? The answer is yes in our examples. The first example was Apple. The second example I'm going to go to is Amazon. I was just looking at the timing differences. Apple, we know it's a little early, okay? Little green shoot, but we don't have that moving average turning green keyword as yet, okay? And because of that, we're choosing a strategy that is a little bit more, well, not as sensitive initially. Now, if we go back and look at this, send that order. Now what I'm going to do is going to go back to the Apple. Now, take a look at this. There's no moving averages that are green, not at all. But if we went back to this, Amazon, now you might be thinking, well, James, you're pulling these up individually. Is there any way you could actually just see those all at once? You better believe it, okay? If we pull up, let's say, a list, Dow Jones. Now, when we're talking about indicators, we're talking about also like some of the track momentum, overbought, oversold, and so on, but also timing, okay? Now, if you take a quick peek of this, what we're going to really be looking for is this column right there, that 10HC. Why? Okay? Now, first of all, the green background means that the moving average should be green. Double check. So the color of the box represents the moving average color. Double check on the chart. The number in the box represents the number of trading days that the moving average has been that color. All right, so that's not that bad. Now, what do we take away from that? Well, what might the investor be looking for? Well, we'll tell you. They're probably looking for a couple of stocks that might be going from just turning green today, like these ones, or this one, right? Or any others, or this one, okay? The 10-period moving average, we're going to put E for early, okay? If we actually start to get, let's say, that 10-period moving average to go green and see kind of in those blue circles, they just turned green today. Now, if we start to actually get where the 20-period moving average also goes green, let's put a star, okay? Now you're saying that they turned today. So what I'm telling you is you don't have to bring up just each individual look at the chart. Feel free to actually just put the 10HC and the 20HC on your column headings. Now that MAX, as you can probably imagine, that's moving average cross. And that X, that green actually means it's a bullish crossover today, bullish crossover Friday, bullish crossover Thursday, 2 days ago, etc. So that's how we can kind of see those. Now, if we pull this up, and I want to go back to that. Now, if we pull this up and say, what does Amazon look like? Let me see for myself. Well, Amazon right there, okay, Amazon, if I follow that all the way over, that shows the 10-period moving average went green today. It's also showing the cross today. Now, I want to get this out here, okay? This class is trading with technical indicators. And sometimes I think the worst thing that a teacher could do is to kind of create a new tool every week. The truth is, if you talk to a plumber, electrician, a dentist, and so on, or someone that maybe does financial accounting, they use the same tools over and over and over and over. The key is they know how to use them. Okay? They know how to use them. So you go to the store like Home Depot, buy a tool. It doesn't mean you know how to actually do the job. Trading with technical indicators, this class, is about what are those kind of the principles and the practices of the tools and getting confidence. Smell that? Confidence to actually trade what the investor is seeing because they understand how it works or could work. Okay? Now how long does that take? Trade as much as possible in the paper money account to get practice sooner than later. Okay? Now, if we went back and look at this, now if you might say, well, James, is this a stock trade or option trade? I'm going to show a stock trade, and we're going to go to Amazon. Now, if you look at Amazon for just a second, Amazon, we talk about the timing. Now, remember on the chart, we saw that that list, the moving average went green. Now, it showed that, and it also showed a cross, and it showed that. Okay, we also see if we take a look at this, close above the high of the low day. Okay, fine. When we actually talk about the oscillator going green on the MACD, we don't see that the keyword is yet. Now, let's talk about timing. Okay. It's so interesting to me. It's like sometimes as bullish investors, we look for excuses not to take entries. Oh, yeah, but we don't know this. Yeah, but. Okay. Well, let's just double check. Let's just go back to the ruler and just kind of say, we could say this is too high, but actually it's right at the 10-period moving average. We're not even at the 10-period moving average. We're not even at the yellow line. So this is what I'm saying. We are early with a form of confirmation, okay, that's trying to turn. When we talk about that, that does not mean that it's guaranteed to go up, but why do some investors try to get in? They try to get in near that turn because they like diagonal breakouts, maybe like AXP. Think of the diagonal breakout like a horizontal breakout. They're closer to support. So whether they buy let's say a horizontal breakout, a moving average crossover, a diagonal breakout, risk is risk. Okay? Now, what I'm going to do is let's go back to this. There. We're going to right click on the chart. And what I'm going to do is go buy custom. And I'm going to go with OCO bracket. Now, let's run those numbers. Okay? Now, when we talk about running those numbers, we want to kind of have a very clear understanding on running the numbers. You're in the business of investing, okay? And when you talk about investing, we're really talking about like there should be a procedure, okay? Current price on this right now, let's double check, 246.64, 246.67, excuse me. Support, okay? Now, if we kind of pull this up and say, where do we see support? Well, that little base area lately was 238.32. Okay. Now, wait, is this an option or a stock trade? We could just look down here and it's going to tell us this is a stock trade. Now, when we come back, what you're now going to see is the stock, if we take support, less 2%, 233.55. Dollar amount risk. Now, kind of have to flag that because we're assuming what? We're assuming that the stock sells at the stop price. This is the forecasted risk, okay? We got to see where it fills. That's the risk of the stop loss. Percentage, if we lose 13 of 246, well, about 5%. Now, if we take a quick look at this, we're now going to come back down and type that stop in right here, 233.55. Okay. Dated GTC. Okay. Now, sometimes these stocks might try to swing back to where they broke down from. Now, I don't know about you, but one of the most frustrating things that I dealt with early on in my investing is I would see something that broke support, the investor sells, and then maybe a month later or so, if it did, the stock comes all the way back up like the whole entire drop never happened. And what happens is the investors locked in the loss, did not see that stock swinging back up. They didn't even trust it. Okay. Why? Well, because they lost in the last one. And they thought since they lost in the last trade, that had a bearing for the next trade. And the answer is it doesn't. The only one it has a bearing to is the person that got emotional. Okay. So you got to kind of think of this like try to turn the emotions off and just think numbers. Okay. Now, can market conditions, sector conditions influence what the stock is doing? And everyone should just bow their head and just go, yes, of course it can. Okay. So sometimes you can just get pushed around by what the market does and the sector does, and it affects the stock. So sometimes your analysis is right, but just like if I was running a business, I opened up a store and then the economy went into recession and depression, I might have had a great store. I might have had great ideas, but I just had bad economics. Okay. That type of condition. I mean, it just happens. And the same thing happens with stocks. Now, I'm going to put a target at 267. 267 is in the mid section of that channel right there. Now, what I'm going to do is I'm going to go back down to 233. Okay, stop wise. Now, when we actually go back and really take a look at this, now you need to actually put this in the paper money account. So let me get caught back up here. Right click, buy custom. There it is. Okay. Said that target was 267 and that stop was 233.55. Want to do these trades together in the paper money account so we can practice together. And what I'm going to do is put that there. If we're talking about no more than 10%, okay, we're going to say 5,100. 5,100 is going to give us how many shares? 20 shares of stock in the margin account. Target stop, we said what the risk of the stop was. It could sell at that price or lower, okay? And had a discussion on that, and we're going to go ahead and send. All right, now, can anyone actually tell me the trades we did so far here today? So far, okay? So number one, we did a stock trade on Amazon. Number two, we actually did a cash secured put on Apple. Okay. So that was a little early. We're going to look and see if we can get a little reversal. The trade before that was American Express. And that was really a long call vertical. Okay. Now, what I want to do just really quick, because I'm kind of seeing some things in the chat regarding the scripts, okay? So this page right here that is on my X page, anything that you want to actually kind of grab that we talk about, okay? So I put right on my X page, right at the top, kind of the picture of that we have as I'm teaching these classes, these scripts, the column headings, right? If you said, I would like that example given of what you talked about, the whole moving averages, okay? Well, any of the script that we actually talk about, like if you said, look, I want the close above the high low day right there. What is the column heading? What's the name? What's the name of it? Okay. What's the purpose? Bullish bound setup. And then what's the script? Okay. So what's the heading? What's the purpose? And in blue, that's the script code. Okay. Now, what I'm going to do is I'm going to come back. So that's where you actually see those. You can't, well, you can copy and paste those, but probably have to be a little bit more technical advanced. It might be even easier just type them in. Remember, they are case sensitive. Okay. Now, if you said, James, could you send those to me just real quick? I'm going to go back to that. I'm going to put the 10HC in there. If you said, I don't have that, can you give that to me? Let me do that. I can do that in 30 seconds or less. Okay. The first one I'm going to send you is the 10HC. The HC stands for whole counter. There's the 10. And this one right here, the next one in the chat, that's the 20. Okay. If you say, I don't have those, there they are. Now, the other stock I just want to kind of make mention of is Caterpillar. Now, Caterpillar is, and let's go ahead and just make sure that yep, that's sent. Let me double check. Filled orders. Yeah, Amazon did fill. Okay, just want to make sure that got pushed through. Now, let's go back to just real quick Caterpillar. Now, Caterpillar has been one of the main stocks. If we brought up relative strength, and the relative strength, which many liked, okay, I'm going to compare the relative strength not to the S&P 500. I'm going to make it comparison to the industrial sector. Now, remember, when you compare, there's always a benchmark, and then you're going to see there's a line, okay? The red line at the bottom, that is the industrial sector. The green line is the performance of Caterpillar compared to the industrial sector. Now, some people will say, look, I want to buy something where the stock has shown a history, thinking that history might continue. Okay. And what you're now going to notice is this line has been going up and up and up. That doesn't say it's going to do it forever, but we're just saying, hey, look, could that trend continue? Okay. Now, I'm going to drop that back down, and we're going to look at Caterpillar here. Now, if you look at Caterpillar, you might say, that ain't nothing to look at. Too high, too high, too high. Well, hold on a second, okay? And this, what we notice is kind of have like your classic ascending triangle. Now, we could draw the line from left to right or right to left and kind of see over the last 1 to 2, 3 months, is there a diagonal or horizontal line? If there's a diagonal line, kind of more of an uptrend. On the top side, there's been horizontal resistance. Now, horizontal resistance is really right around 920, 930. Okay. Now, we might look at this and say it's dadgum too high. Well, let's double check and kind of put that to rest if we kind of measured it with the envelopes. We measured with the envelopes, we're barely above the 3% line. Now, that doesn't mean it's going to go up, okay? We're just saying, hey, look, the bounce was really a bounce. Most recent one was on Friday, okay? Today, gap to the upside, and you'll see right there. Now, some people are going to say, yeah, but I'm going to wait for it to break resistance. You got to remember, if you got a sector that's going up, like industrials, and these investors already know that historically CAT has been one of the stronger names in the space, they might start to speculate that CAT might continue to do that. It's not guaranteed. Now, so remember, the position doesn't have to be all at once. They might say, look, I'm going to dollar cost average. I'm going to go buy custom with stop. And what I'm going to do is I'm going to set that stop right underneath at 866.74. Okay. Now we're going to do this quick. I'm going to type in the price, 937.84. Support, 866.74. Okay. If we look at the stop, there it is, dollar amount risk, percent. Now notice that percent's a little higher. We talked about, we don't want to see a percent greater than 10. We're at it. Why is that? It's because we bounce off that diagonal line. So it's below the 10% off the diagonal line, but it's a little elevated initially. And I'm going to put that stop at, let's say, 849.41. Okay. Now, it's a stock and option trade. It's a stock trade. Okay. Data GTC. So we did today, the AXP. We did Apple. We did Amazon, and we did Caterpillar, and we'll send that through. Dollar amount, we're going to do about $5,100 as well on that position. Okay. Now, one thing you want to kind of notice is what's the most important indicator? The price. And if that price is actually starting to break the lines of resistance and or support, it's triggering potential buy or sell signals. Okay. For some investors. So the biggest thing we want to kind of get good is reading the price And then second, how the price is influencing those moving averages and oscillators. Now we got coming up next, we have with us coming up is going to be Cameron May. Coming up right at the top of the hour, I want to say thanks to Barb for answering those questions in chat. Do not forget to subscribe. And also in the chat, there's a survey, just 2 questions. And when you click on that survey, it's going to give us just 2 questions about today's session. How likely would you recommend Charles Schwab to your friends, families, or colleagues? And second, how satisfied are you with the webcast today? Thank you in advance for filling that out. And also, if you'd like to actually kind of write something down, you can as well there. So also remember that with what we discussed here today was done for educational purposes only. All investing involves risk. And also remember that this has been the class of Trading with Technical Indicators. Thank you again so much as we practice these 4 trade examples. And we will follow through on these throughout the week as well. Thanks so much. Stay tuned for Cameron May coming up next. Bye-bye.